Hi everybody, welcome back to the channel, and today we are talking about 3 ETFs that I think are good if you're looking for high yields, cash flow. Now, there's some of these ETFs like I talked about on the channel recently, which was QYLD, and you know, QYLD is, the problem with this one is long term you'll see that the ETF has a problem with net asset value decay. Essentially what happens is the net asset value goes from, say, $25 per share down to $17 per share. So you can watch that previous video if you're interested, but today I want to talk about 3 of these ETFs I actually really like. The first one being the JEPQ ETF, and this one right here, you'll see that we've been in a consistent uptrend, not a huge amount, and that's one of the major drawbacks of these ETFs is that you're not going to really participate in a huge amount of any kind of capital appreciation. But at least we are up 11.89% in the last 5 years. Now, inflation has been very high, keep in mind. And so you'll have to keep in mind that basically with these ETFs, your share price growth is not going to be like NVIDIA or any of these growth stocks that have been going crazy lately. But what we're looking at over the last year, for example, is 15%. So really depending on where you're buying this ETF, if you're buying it pretty low and dollar cost averaging, the main thing is, though, you're looking at consistent cash flow. So people who are always focused on capital appreciation and they don't have the dividends to fall back on, you're going to be looking at higher risk. So in terms of any kind of dividends you can get from an ETF that pays you every single month or every single quarter, at least you have that predictable cash flow. Because if you're buying growth stocks with higher betas, a lot of those don't pay dividends. But this is definitely for more of a conservative investor who wants to get a consistent rate of return that is paid to them either every month or every quarter. And this is one way to do it. So you'll see those consistent dividends coming in every single month. And, you know, like I said, ask yourself what your risk tolerance is, what your investing goals is. We talk about all that kind of stuff on the website, by the way. Daily Investment Advice is a website I created for free. It's available in 14 languages right now, and you can go there and check this content out if you're interested. This is all about investing, saving money, paying off debt, stock trading, options trading, all kinds of resources, whatever you need. I even have services on Fiverr that I offer, so if you guys are interested, check that out. But with that being said, you guys can take a look now at the JEPI or JEPI ETF. Now, this one is another one of my favorites, primarily, once again, because we have a consistent monthly dividend. You'll see those consistent monthly dividends here at 7.65%, so not as much as JEPQ is paying right now. But at the same time, you're looking at a share price that at least is positive over the last 5 years. If you look at QYLD over the last 5 years, we're down 21.52%. So this one follows an option strategy as well. So when we're looking at these strategies, a lot of times you're going to see option strategies such as cash secured puts, covered calls in this case for this ETF. You're looking at those types of option strategies that are going to be beneficial in terms of generating that cash flow. But with that being said, you'll see over the last 5 years down 21.52%. So not ideal. But if we're looking at an ETF like JEPI, at least we've held up. So up 12.62%. Over the last year, you'll see we're only up 3.30%. So you could argue that's barely keeping up with the inflation rate. But at the same time, you're getting that consistent monthly dividend, which if you just look back at the history once again, you'll see that they've been paying those dividends every single month. So you're getting that consistent cash flow. And you can kind of think about these ETFs almost like a rental property, because even though it's not directly investing in real estate, you're still getting those monthly dividends and you're getting lower volatility in the process. You're not really having to worry about your portfolio fluctuating by a huge amount. It's going to be nice and stable because of that lower beta and the overall lower volatility while collecting that monthly dividend. So it'll be interesting over the next 5 or 10 years if these ETFs are still around to see how they're doing. But so far, since inception in 2020 for this one right here, and then for JEPQ, it looks like that one came out in 2022. So this one's newer. And of course, the Nasdaq has been going up by a lot. So it'll be interesting to see what will happen when the Nasdaq actually goes back down. We enter a bear market. And it'll be interesting to see what happens to an ETF like this. My guess is that it would go down less than the Nasdaq, but we'll have to wait and see. Now for this one, it's focused on the S&P 500. So you have to focus on that different index to compare it to the performance of this ETF. Now, for the next one, we're talking about the SPYI ETF. I actually just made a video on this one too. Now, once again, we're looking at consistent cash flow, monthly dividends. This is the highest paying dividend yield at 11.96% currently. And if we actually look at the last 5 years, or since inception, this came out in 2022, we're only up 3.56%. So not doing too much. If we look at the last year though, we're up 1.53%. So once again, kind of just maintaining the share price. Now I do like this one for right now. Over the long term, we'll have to see how this performs. So far, like I said, this ETF that we just talked about, and of course JEPQ, the other one we just talked about, those have held up okay. Now, this is 2022. Once again, this one is 2020. So this one has held its performance, let's just say that, over that time frame. So at least we're holding on to our initial principal and we're collecting that cash flow at the same time. Now, this one, like I said, 2023 is when it looks like. So if we look at 2022, actually, sorry, September of 22 is when this came out. So we'll have to see how this does over the long term. So far, you're kind of noticing a consistent uptrend. So if the bull market in the S&P 500 and the Nasdaq continues, then perhaps this one will continue as well. Now we can go over to the website is finviz.com real quick, just to compare the shorter term charts and how we're looking on those. So for the ETF, we just talked about the NEOS S&P 500 high income ETF, SPYI. This one, you'll see the chart, like I said, is kind of in an uptrend right now since November, coming down to $45. Now we're at $50. And if you look at this, it's, on a shorter term basis, we're only going back about a year, but that just gives you an idea of what we're looking at. Now, if we look at JEPQ, we have a similar thing going on here. So we have this one in an uptrend, not as much as the actual index, because like I said, you're focused on those monthly dividends, but you're not going to get that capital appreciation like you would be seeing in a growth stock or anything like that. So you're going to have that nice stable return, monthly dividends. And if we're looking at this since November, we're at $45 for JEPQ. Now we're at $55. And then the last one, the other ETF we talked about, JEPI or JEPI, the JPMorgan Equity Premium Income ETF. This one was at $51, and now we're at $56. So kind of just going back to that November low on the chart there, you can see how we've been trading. With that being said, guys, thanks so much for tuning in. Hope you guys enjoyed this video, and we will see you in the next one. Take care.